Good evening, everybody. My name is Nick Santiago. I'm going to give you a quick little overview of our proprietary price pattern and time trading methodology. We call this the PPT. Allow me to show you one of the trades that I've told traders about and I've given out over time was a chart of Freeport-McMoRan. And this is when traders were getting very, very greedy, believing that the commodity boom was going to last and they couldn't go into correction mode. But when I saw this chart, I alerted traders right away. I said, hey, this move looks like it should be over and we should come into some selling pressure. It looks like the base metal stocks or the copper stocks in this case may have topped out. And one of the ways I did this was very, very easy. What the methodology dictates is that price can never get too far away from the 20 moving average. So what I did here was I simply drew a line connecting this pivot high to this pivot low, and then all I did was copy that line. And if you just copy the distance from the pattern high to the 20 moving average, you'll notice that if you just take it here and you put it against the 20 moving average, price actually traded just a little bit higher than that level. And you should know that price can never get too far away from the 20 moving average. And sure enough, you see you put in a big topping tail that day, then price traded sideways and proceeded to trade lower. So once again, very, very important, but you always want to watch for how far price travels at any one time. So again, this was a nice little trade setup that I gave the members, and I told them that the copper trade looks like it's topping out using Freeport-McMoRan as a barometer, simply using that methodology that price can never get too extended from the moving average. And you can see how the stock has really sold off since then, all the way much, much lower, down until basically the low $30 level. Another trade there that has to do with greed is something that I actually put out in a press release to the whole entire world. And if we just rewind the clock here and just go back a few years, you're going to see this goes back to, I believe, May 2008. I put out in a press release that this stock should not really trade or exceed much higher than the 116 level. And you could see, and I said this may mark the final high in the stock. Look for a quick 10% correction, and we could possibly look for as much as 20% or more. Little did I know this stock would never see these levels again. You can see right here, again, this stock just had a parabolic move. It was overbought. You could see it traveled all the way as high, I believe, as, well, let's see exactly. The high here was 116.43, and I wrote in a press release, this stock shouldn't trade much higher than 116. Watch for a quick 10% correction, and even more after that. And you can see how this stock just continued to trade lower. But all the greed out there, people just jumping on board thinking that this will never ever go down. And you can see that it marked the dead top there. And if you go to current day, dry ships today is trading at $2.50. So again, it's important to recognize these signs of greed in the market, and once you do see them, they can also mark important tops. Here's something that I told a lot of my followers that this was also looking like a top. BVSN. This is broad vision. Now, unfortunately, a lot of us weren't able to short this stock, but and that just made it more so that I thought that this was going to go lower. But again, this was a big breakout play. It moved higher, went to around $45, sold off sharply, rallied up again to around $45, backed off, and then you see this big, big move all the way up to over $50 a share, and then you had a big reversal bar. Well, when I saw this reversal bar day, I told my subscribers this thing should go back down to 20 bucks. I think I said 25, and sure enough, you see the big sell-off, sideways bearish pattern, and then a breakdown all the way to the 25 level. And today the stock is trading, somewhere around $8 a share. So again, just another sign of recognizing the patterns here. This is a pattern that I will be teaching you all, and you'll see how this works out. Very, very powerful pattern. I've used it probably to pick more tops and bottoms in the stock market over the past 10 years than any other pattern, and I will be teaching that as we go along. But this is one of the charts that you could see, just another greed pattern, and you don't want to get greedy at market tops. It's never a good thing. Now, let me show you a couple of fear trades that we've taken recently. Here's a chart of the spiders, the S&P 500. Again, if you just look at this chart right here, and we just rewind the clock going back last year, you're going to see that the market really was selling off, entering bear market territory, down about 20%. Market came back down, and then it found a big rally on a nice spike in volume, and it traded all the way up to this 200 moving average, which was a major resistance level. Price pulled back. It could not get above that 200 or above that pivot high right there. Showed us some signs of weakness, but we came down pretty sharply, and here's where I alerted many of my followers to go long here. And I said, you know, we're coming up into a key level to go long. And using the methodology, we had a key time count. We also had a seasonality trend. We also had what we call 618 Fibonacci retrace, and I'll show you that as well. And that came right into that 618. Let's clean that up and make that a little nicer. There you go. You'll see how that came right into a key level right there. And you also had what we call a nice little gap fill right at that level. So when I saw this, actually, this was the day after Thanksgiving. I told my wife, I said, honey, go out and spend another $5,000 on this day. And sure enough, you could see the next trading day, the market got a big gap up. The spiders went from basically 116 all the way up to around the 120 level and continued to trade higher after that. Another trade of fear came in not too far after that, and it was right here as the markets rallied up and they hit that 200, couldn't get above there, and you could see the big sell-off right into that 120 level. Well, if you take a look at this, you're going to see this was another Fibonacci 618 retrace level, also a gap fill into a key support area. So again, this was another level which I had told our subscribers we'd look to get long at this area, and sure enough, you could see the big move that the market had shortly afterwards. So again, recognizing when there's fear in the market, and when fear comes in and it can be found with good support, it is a buying opportunity and something that you can trade in the markets. Now, I want to take a look at a trade about uncertainty, and I'm just going to stick with the spiders. But right here, we were short the spiders. I believe we got short on the 20th, yes, the 20th of September, really right at the highs. And what I had seen here was this was all just bearish consolidation. But many traders out there were confused. They weren't sure what's going to happen. Is the central banks going to inflate the market up? But you could see this big leg down, and then you had all of this bearish consolidation. Then you had this lower high. Well, we had issued an alert to go short, and on this day right here is where we covered our short trade. I alerted our members or our followers, and I said, hey, listen, this is a key level down here today in time and in price, and what you're going to want to do is just move your stop up, or down I should say, to the 110 level. Now you can see price gap down below there and closed a lot higher, and I said that is probably the short-term low, and what we were looking at is a double bottom, and often you'll get these undercut lows and then they'll reverse right back up. And you could also see that this occurred on massive volume right here on October 4th, which marked a stock market bottom for the S&P 500. But it happened on 458 million shares. So when I saw that, I was pretty confident that the market had put in a short-term low. And what we did was we had a nice short trade from around the 121 level all the way down below the 110 level, locked in some nice gains right there, and the market moved higher. But again, when uncertain, make sure you're looking at the volume, you're looking at the price, and most importantly, you're always looking at time. Okay, so that's our little lesson for tonight. Again, remember what the legendary trader Jesse Livermore says. The markets never change because human nature never changes. Therefore, it always is the same. And again, human nature is controlled by greed and fear. So have a great night, everybody. We'll do more of this soon. Take care. God bless.